Good day, guys. Today I'm going to be talking about candlestick patterns in general, and I'm going to be talking about the 5 major candlesticks that I use to trade in the forex market. And number one on my list is the engulfing candlestick, which we have the bullish engulfing candlestick and then the bearish engulfing candlestick. We have the Marubozu, which we have the engulfing and we have the bullish Marubozu and then we have the bearish Marubozu. Then the next one is the Doji. The Doji will also have the bullish engulfing, the bullish Doji and then the bearish Doji. The bullish Doji is known as the Dragonfly, while the bearish Doji is known as the Gravestone Doji. Then the next one is the Hammer. For the Hammer, we also have the bullish and also the bearish Hammer. The bullish hammer is more like a letter T, while the bearish hammer is like an inverted hammer. The shape of this hammer candlestick is like the normal hammer a carpenter uses to work. Then we have the star candlestick pattern, which is my number 5 candlestick pattern. I also have the bullish and the bearish pattern. The bullish pattern is known as the morning star, while the bearish pattern is known as the evening star. It's known as the evening star. Now, straight away, without wasting too much time, I'm going to start with the first one, which is the bullish engulfing candlesticks. That's under the engulfing candlestick pattern. Now, when I say engulfing candlestick pattern, what do I mean by engulfing? Engulfing simply means something that is swallowing, or should I say, is overshadowing another thing. You understand? Now, I said this engulfing candlestick pattern now is of two types. We have the bullish and the bearish engulfing stick pattern. This bullish engulfing candlestick, the reason why we call it a bullish engulfing candlestick is because the previous candle that was formed was a bearish candle, and then it was followed by a bullish candle. Now, this bullish candle engulfs these bearish candles in the sense that it's telling us that, okay, sellers in the market are weak and then it's time for buyers to step into the market. You understand? Let's take, for example, when the market is on a downtrend and then the last candle there was a bearish candle, and then the next candle you see is a bullish candle, and this candle is not just only bullish, it covers the previous bearish candle that was formed. You understand? Now, this bullish engulfing candlestick is mostly found in support zones. It's found in support zones. That is, first of all, you must first identify your resistance zones. Once you identify your resistance zones and then the market is coming down to give you a retest, then you observe for such candlestick pattern. You understand? I'm going to show us an example on the chart right now. Let's look for an example of a bullish engulfing stick candle pattern. Let's look for it. Don't forget, I said around support zones. Now, this is a very clear example. But let's first of all identify the resistance zone that was together with it. Let me go to the 1 hour, because one beautiful thing about candlestick is that they are more valid in higher time frames. Candlesticks are more valid in higher time frames. So if you see a bullish engulfing candlestick pattern on the higher time frame, it simply tells you that this market is definitely going to buy. And from the knowledge of top-down analysis I said top-down analysis generally is you go from a higher time frame down to a lower time frame. So imagine seeing this candlestick pattern on a higher time frame, and then you have to catch like 2-3 candlesticks from that higher time frame. That will tell you that the move on the lower time frame is going to be very long. That is, you are going to catch a very long amount of pip on the lower time frame. You understand? Okay, why am I not seeing? This? Let's look for a market that has been trending up. Market that has been trending up. using a suitable example. Let me still check here. Alright, this is a very clear example. Now this was a previous support zone here. You can see market tapped there and then started rejecting back up, and then the next thing we had on this side was a bullish engulfing candlestick right here. You can see it. The blue candlestick was the last bearish candlestick that was formed, followed by a bullish candlestick, which is the black one. You can see that the black candle now was able to engulf the previous bearish candle. This is where the bearish candlestick started from, and this was where it closed at. And then the bullish candlestick started from this place and then ended above here, which covered the whole bearish candlestick. You can see that they are not the same size. The bullish candlestick is bigger compared to the bearish candlestick, and that's why we call this a bullish candlestick. And you can see that after this candlestick pattern was formed, the market pushed to the upside. It pushed to the upside aggressively. Let me show us an example. Let's say immediately after this candlestick pattern was formed and then the market closed, we entered and then our stop loss was below the bullish candlestick pattern. Now we were risking 145 pips to make 328 pips. This is a very good and valid trade. A 1 to 2, almost a 1 to 3. You understand? So this is a very good example of a bullish engulfing candlestick. So if you see such candlestick patterns on support zones, you know that is a valid entry for a buy. You know that is a valid entry for a buy. You understand? Click on this zone. So if I can cite another one on this zone here. Sorry. On this particular zone here, I can cite another one. Now this was a previous resistance that became support on this zone here. You understand? And you can see the candlestick pattern that was formed here was a bullish engulfing candlestick pattern. You understand? Immediately the close of that bullish candlestick, then we enter for a buy. Our stop loss a little bit below the bullish candlestick, and then we target the next resistance zone, which is this zone here, this particular side, as our take profit. You can see that our take profit was smashed easily without stress. So it's as easy as that. It's as easy as that. Don't need to stress so much. Just take note of such candlesticks. You cannot learn it in a day. You have to take time of study, and then on your own you try to identify them on the charts. So that's that about the bullish engulfing candlestick. So now let's go to the bearish engulfing candlestick. Now this bearish engulfing candlestick is an opposite of the bullish engulfing candlestick. The bullish engulfing candlestick now moves when the market is on a downtrend and trying to move back for an uptrend. You understand? So it's more like a reversal candlestick pattern. You get? So same thing for the bearish candlestick. Bearish candlestick happens when the market is on an uptrend and then it's about to start reversing for a downtrend. You understand? So it's also a reversal candlestick pattern. And then the bearish candlestick, they are sited around resistance zones. They are sited around resistance zones. You understand? So the same thing with the bullish engulfing candlestick, just that it's the opposite of the bullish engulfing candlestick, and it is located on the resistance zones. You understand? So now let's look for a very good example of a bearish engulfing candlestick. Let's look for a very good example. Let's look for a market that was trending up and then started reversing to the downside. Now this is a clear example. This was the first leg of this resistance zone. Now this was the second. You understand? That was the second. So now the bearish engulfing candlestick we are seeing here is this. It's this zone. You can see it. It's very clear. And you can see that immediately after the close of that candle, you can see the spike. You can see the spike to the downside. So like I said, our stop loss a little bit below the close of that candlestick, the bearish candlestick, and then you target whatsoever it is you want to target. Understand? But mostly it's advisable you target a 1 to 2 trade. You understand? A 1 to 2 or a 1 to 3. You get? So you can see how perfectly this market moved. You can see how perfectly this market moved. Let me zoom in so you can see the bearish engulfing. You can see that the previous candle was a bullish candle followed by a bearish candle. The bearish candle that was formed after the bullish candle, you can see that it is bigger than the bearish candlestick that was formed. So this is how we identify bullish and the bearish engulfing candlestick pattern. I believe you understand what I'm trying to talk about. So now, the next candlestick pattern on my list is the Marubozu. The Marubozu. A Marubozu is a candlestick pattern that closes above and below. It's a complete candlestick pattern. There is no rejection wick on this particular candlestick pattern. It's a full candlestick that closes both above and below. And it also have a bullish and a bearish Marubozu. A bullish and a bearish Marubozu. As the name implies, a bullish and a bearish Marubozu. You know that a bullish Marubozu will be identified around the support zone so that it can push the market to the upside, and then the bearish Marubozu will be identified around the resistance zone so that it can push the market to the downside. You get it? So now let's look for a Marubozu. Let's look for a Marubozu. Most of the times, a Marubozu might look like a bullish engulfing or a bearish engulfing candlestick. You understand? And sometimes a Marubozu happens after a particular candlestick. You understand? Sometimes it can happen after a doji. It can happen after a star candle. You understand? But your ability to be able to identify a Marubozu will tell you that, okay, this market still has momentum to still push to that direction that you are looking at the market to push to. You understand? Let's say the market is on a downtrend and then you are looking at this market to reverse back to the upside, and let's say, for example, you are now able to cite let's say like a doji, a hammered, and the rest, and then the next candle you are seeing is a Marubozu candle. That signifies that this market is going to push to that upside. It's going to really buy. You understand? Now this is a very good example of a Marubozu here. This is a very good example of a Marubozu. This one right here. This candlestick pattern is a very good example of a Marubozu. A very good example. Now this is it. This black candlestick here is a very good example of a Marubozu. Let me show you how you can enter a buy trade on a bullish Marubozu. So immediately the close of this candle on the upside, you enter and then you put your stop loss below that candlestick, and then you can see your target, the previous resistance zone. You can see how well this market pushed. Tell you that, okay, this market still has potentials to still push to the upside. You understand? It's as easy as that. There's nothing complex about locating a Marubozu. As easy as that.
Now this is a bullish Marubozu. Let's see what a bearish Marubozu looks like. It's the same thing too. It's also the same thing. It's also the same thing. Okay, let's look for a market that is trending to the upside, that's about to reverse. Then perfect. I think I've found one. Okay. Now this is a Marubozu here. This is a Marubozu. You can see it. So immediately after the close of this Marubozu, you enter for your sell, your stop loss below it, and then you push it as far as you want to push it. You can see that. Tell you that the market is going to push to that direction very well. And then, like I said, your target can be your next resistance zone whatsoever, or you can do your 1 to 2 or your 1 to 3, and you are good to go. Now the next candlestick is the doji. I said the doji has a bullish doji and then a bearish doji. The bullish doji is known as the dragonfly, and then the bearish doji is known as the gravestone doji. You understand? So now the dragonfly looks like the letter T. It looks like the letter T, and this is telling us that okay, sellers are becoming weak in the market, and then it's time for buyers to enter into the market. Or should I say, sellers no longer have control in the market, and then buyers are now in charge. They are now in control of the market at that particular time. You understand? And then the bullish doji, which is the dragonfly, is located around the support zone. It's located around the support zone, and it just signifies a buy pattern. It signifies a buy pattern. A candlestick pattern is only significant when it's around a support zone or a resistance zone. If you see a candlestick pattern when the chart is still trending upwards or downwards, you can take it as irrelevant. You understand? But it's located around a significant zone, which is either a support zone, your demand zone, or a resistance zone, your supply zone. You understand? You can classify that particular candlestick pattern as very, very relevant. You understand? And then you first of all wait for the next candle that is going to be formed after that candlestick pattern. You don't just rush into the market because you see that okay, this candlestick pattern is a doji, so automatically you just feel like the next candle is going to be a bullish candle. No, you wait for the next candle after that dragonfly is formed to be formed before you now tell yourself that okay, it's time for me to enter into the market for a buy. You understand? Like I said, the dragonfly looks like a letter T. It looks like a letter T, and it is located around the support zone, and it indicates that sellers are weak in the market and buyers are in control of the market. Then for the gravestone candlestick, is the opposite of the dragonfly. The gravestone is the inverted pattern of letter T. You understand? It's letter T inverted, and it signifies that buyers are weak. It signifies that buyers are weak in the market, and then sellers are in control of the market, and it is located or sited around the resistance zones. You understand? It is sited around resistance zones. So now let's look for a dragonfly and a gravestone candlestick pattern, and then I show us how we can use them to make simple entries in the market. Let's look for a dragonfly first. So now, first of all, we're going to look for a market that is trending downwards. And then we can use it to get an entry for a buy. So this candlestick is not always that you really get to see this candlestick, and the good thing is they are more visible in lower time frames. But another good thing about identifying them in the higher time frame is that it gives you more validity that the market is going to do what it's supposed to do. You understand? That's just the importance of seeing these candlesticks on a higher time frame. They give you that confidence that yes, this market is going to actually push to the upside. Okay. Now, let's find this is difficult. Just want us to see how we can use them to get simple trades in the market. I would have just identified them and keyboards. I want you guys to see how I'm moving the chart, and then you'll be able to identify them yourself even without me asking you to point these candlesticks out. Now, perfect. I think we've seen a particular one here. Like I said, it's a letter T. Now this is a doji, a dragonfly doji. That's how it looks like. This is it here. You understand? So like I said earlier, immediately that candlestick pattern is formed, you first of all wait for the next candlestick to be formed if it's going to be a bullish candlestick pattern. You understand? So as you can see from this place now, the next candlestick pattern that was formed after this doji was a bullish candlestick pattern. You put your buy entry on that zone, your stop loss a little bit below that candlestick pattern, and then you target what you want to target, either a 1 to 2, a 1 to 3, or your last resistance zone, whichever one you want to. You understand? So now from this kind of market, now you can see that the market was trending to the downside. The market was trending to the downside, and that was how we were able to wait for that support zone. You can see it. The market was trending to the downside, and then even broke our trend line, we tested it before it now formed that doji. Once it formed that doji, we decided to enter for a buy. You understand? It's as simple as that. No stress. So now let's look for the gravestone candlestick pattern. The gravestone, which is the bearish doji. The bearish doji. Bearish doji. For the bearish doji now, we're going to look for a market that is trending to the upside, and then take note of the parts where the market started reversing downwards, and then we can find perfect. I think I just found one on a very good zone. You can see that this zone is a very significant zone here. It's a very, very significant zone here. Now this is a gravestone doji. A gravestone doji. Just that the next, okay, yeah, it's even perfect. After this gravestone doji was formed, the next candlestick that was formed was a bearish candlestick pattern. You can see it. It was a bearish candlestick pattern. Now don't forget, immediately after that second candle is formed, you make your entry, and then you target what you want to target, your stop loss a little bit below that candlestick pattern, and then you are good to go. You can see the perfect movement of market, the impulse with which market moved. You understand? So that's a gravestone doji for you, a bearish doji pattern. Now the next candlestick pattern on my list is the hammer. The hammer. Just picture the normal way a carpenter's hammer looks like, or the normal way a hammer looks like. Just picture it. Now that is how the hammer looks like on the charts, on the forex charts, and that's why we refer to it as a hammer. You understand? That's how we refer to it as a hammer. Now we have the normal hammer, and then we have the inverted hammer. The normal hammer now is the bullish candlestick pattern. You understand? And it's located around the support zone also. And it's also, the psychology behind this candlestick is that sellers are becoming weak in the market and then buyers are gaining control in the market. As usual, once that hammer candlestick pattern is formed, wait for the next candlestick pattern to be formed if it's going to be bullish or bearish. If it's a bullish candlestick pattern, then you enter for the market, you enter for the buy. You understand? But if it's a bearish, you first of all wait for another confirmation. If maybe another candlestick pattern is going to be formed apart from that hammer, and then you can now decide that okay, this market is actually buying, let me enter for this market. You understand? But apart from that, you always wait for that next candlestick pattern to be formed. Excuse me. You always wait for that next candlestick pattern to be formed. You understand? Like I said, it's always located on the support zone. Now let me show us a very good example I just saw here. This is a very clear example of a hammer. A very clear example of a hammer. You understand? Like I said, okay, now for this candlestick pattern, now you can see that the next candle that was formed was not a bullish candle, but it was a bearish candlestick pattern. You understand? But you can see the next candlestick pattern that was formed after that bearish, it was a bullish candlestick pattern. Now this candlestick pattern now is already a bullish engulfing, because the bullish candle that was formed is engulfing the bearish candle. So it's giving us a bullish engulfing candlestick pattern. And also, if you should look at the candlestick that was formed before the hammer, it's also an hammer, but a smaller hammer. You understand? It's also an hammer. You can see it very clear. The blue candlestick that was formed first is also an hammer. So now it's more like we have two hammers that were formed, but the first hammer was a bearish hammer and then followed by a bullish hammer. That's to tell you that it's a correct pattern, so you are good to buy. You understand? So immediately the close of that candlestick pattern, you enter for your buy. Your stop loss a little bit below that candlestick pattern, and then you target what you want to target. The market might take some time before it gets to hit your take profit, but it's still a perfect entry. You understand? Still a perfect entry. So that's what a bullish hammer looks like. That's what it looks like. So now let's take a look at the bearish, which is the inverted hammer. This is another example of a bullish hammer here. You can see what happened after it was formed. The bullish candle was formed and then par to the upside. Boom. TP straight. After the close of the next candle is when you make your entry. Don't forget. Then your stop loss a little bit below the candlestick pattern, and then boom, 1 to 2, 1 to 3 TP hits. You understand? So now let's look for another the inverted hammer. The inverted hammer. I said the inverted hammer is located around the resistance zones. Around the resistance zones. You understand? Just like the normal capital hammer, you invert it to the other side. Anything you see there, that's how exactly the way it looks like. You understand? Now let's sight a hammer on a resistance zone. Let's sight a hammer on a resistance zone. Let's sight a hammer on a resistance zone. Now this is a very good resistance zone we have around this place. But this hammer that was formed here is on a trending market, so we will not classify it as a valid hammer. You understand? Now this is perfect. This is perfect. This is a resistance zone here. You understand? I believe you can already see the hammer that was formed there already. This is it. This is the hammer that was formed there. Now don't forget, immediately after the close of the next candle, you enter your trade. Your stop loss below the candlestick pattern a little bit. Enter your stop loss a little bit below the candlestick pattern, and then your TP 1 to 2 1 to 2 TP hits. And don't forget, this is on the 4-hour time frame. You understand? So imagine catching this kind of move on the 4-hour time frame. How do you think it's going to be like on the 15 minutes time frame? You understand? Now this is about 136 pips. 136 pips on USD JPY. That's a very large amount of pips. You understand? A very large amount of pips. So this is an example of an inverted hammer we just used here. Let's check if we can see one more before we go to the last candlestick pattern for the day, and then we are done with candlestick patterns. So don't forget, if you have questions, you can always come to my DM. My DM is forever open to you guys. It's forever open. Anytime you feel like you want to come, you can come. Now we have a lot of hammers around this zone, a lot of inverted hammers around these zones. You understand? So now if you should check closely, you are going to see them. When you are watching the video, you can just pause the video and zoom it in. So let's say we want to use this particular one that is here now, this hammer. Immediately after the close of the next candle, you enter your stop loss a little bit below the candlestick pattern. Don't forget, and then target what you want to target. And you can see a perfect move, and this is sitting pretty on a very good resistance zone, which is here. You understand? Sitting pretty on a very good resistance zone. You understand? So these are how we catch perfect sniper entries on our trades. Now this kind of setups, now using candlestick pattern, will give you access to open multiple positions as I've explained some class before. Now it will give you access to open multiple positions, and then you can be able to bag more profits. Now you can see this is about 355 pips. Imagine opening like 5 different pips. That's 355 times 5. You understand? So this is how we capitalize on good setups that will give you good fruits. You understand? So now the next one, which is the star candlestick pattern. The star candlestick pattern are of two types. We have the morning star and the evening star. The morning star is the bullish star candlestick pattern, while the the evening star is the bearish star candlestick pattern. Now this morning star is located around support zones, while the evening star is located on resistance zones. The morning star signifies that sellers are becoming weak in the market, and then buyers are taking charge of this market. You understand? The way this candlestick is formed is that there's first of all a bearish candlestick pattern, then the star in between, then you are going to see a bullish candlestick pattern next. The same thing applies for the evening star also. You first of all see a bullish candlestick pattern, then the star in between, then you see a bearish candlestick pattern. Now let's go into the chart and let me show us a clear example, and then we call it a day. Now the star candlestick pattern is looking like a plus sign. It's looking like a plus sign. For easy identification, it's looking like a plus sign. So we just try to relate it with other things that we've seen before so that we don't get to forget them. You understand? Now this is one here. This is one. This is the evening star. As usual, you enter after the close of the next candlestick pattern. Your stop loss a little bit below the candlestick pattern, a little bit below it, and then now this is not okay. Perfect trade. This is risking 90 pips to catch 213 pips. This is a perfect trade. You understand? But if our stop loss was to be tight, this trade would have taken us out. Would have been taken out from this trade. You understand? So, but it's a good setup though. It's a very good one. Now let's look for another one around resistance zone. Let's look for another one. I think I found one again. If you know these candlestick patterns, they will be very easy for you to identify, and you use them to make money easily. You can just wake up in the morning, sight your support and resistance zones, and then you wait for candlestick pattern, take your trades, and you are done for the day. It's as simple as that. No stress. So I think let's start an example. After the close of the next candlestick, you know what to do. You place your trade, your stop loss a little bit above the pattern, and then you sight your TP ASAP. You understand? Or you can put your TP around this zone because it's your recent support zone. You understand? And then 1 to 2, risking 116 to catch 285, the perfect trade. So now let's look for the morning star around support zones. The morning star candlestick pattern. Let's look for how we buy. Perfect. Just found one example here. Please, let's take note of this candlestick pattern. You can draw them and then write the explanation beneath them so that you can be able to identify them easily on your own without stress. So this is a very clear example. As usual, let me zoom it in so we can see it. This is a very clear example. So as usual, you know what to do. You enter immediately. The next candlestick is closed. This is the next candlestick. You enter immediately. Your stop loss a little bit below the pattern, and then below the candlestick, and then your TP. Boom. You reached how much? 89 pips to catch 399. That's a perfect trade. About 1 to 3, 1 to 4. That's like times 3 times 4 of your risk. You understand? Very perfect entry. Let's look for another one, and then we call it a day. Now, yeah, this is another one too. This is another one here. In fact, there are multiple around here. You understand? But let's say we decided to take it after the last one, and then we saw a bullish candle. Saw a bullish candle, which is this, and then you place your trade, your stop loss a little bit below, and then where's the last resistance zone? I think this should be it. You target there as your TP, and then boom, are good to go. So these are some of the little candlesticks pattern that I personally use for my day-to-day trades, everyday trades that I take. Though I have other confluences I use, such as the M&W pattern I taught you guys about. But one thing about M&W pattern is you mostly get to see a bullish or a bearish engulfing pattern around them. Those are the common patterns that happen around W and M chart patterns. You understand, which is the double top or the double bottom. So it is in some cases that you get to see all these other patterns that I've listed, like the doji, the hammer, and the rest of them. You understand? So it's in rare cases you get to see them, but once they appear on especially support and resistance zones, you know that these candlestick patterns, they are going to play out well. They are going to play out very, very, very well and very beautiful. You understand? So let's take note of this candlestick pattern. So as usual, if you have questions, you come into my DM and then pick it from there. You have a beautiful evening and a nice day. Happy weekend to you.